welcome to my morning report analysis videos on Thursday, 2nd of August with me, Richard Perry, market analyst at Hantec Markets. We had the Fed meeting last night, very little to really change the needle on that Fed meeting. Very slight improvement in the wording, upgrade in the wording from on economic activity from solid to strong. However, there was pretty much zero reaction on treasury yields or the dollar generally across forex markets. There has been a reaction overnight though in terms of how we've seen the market moving towards a more dollar positive position and risk negative, and that has come as Asian markets have started to really react to the potential escalation again in the trade dispute between US and China. We've got the expectation that the US is not going to come with 10% tariffs on $200 billion of Chinese imports. They're going to come with 25% tariffs, so that subsequently has hit sentiment across Asia. We've seen the general trend whereby flows out of emerging market Asia has helped to strengthen the dollar, and that seems to be again the case today. We've seen across the board the dollar strengthening, but also the yen strengthening. Now we had that reaction higher that I talked about on Japanese JGB yields, that sharp move back above 0.1%, and that's been maintained today, and certainly that has helped to sustain a bit of a yen rebound, and I'll talk about that in the chart analysis videos in a bit. Look at these equity markets, DAX, FTSE and CAC all lower, but the DAX disproportionately lower, as ever when the risk sentiment takes a beating. You see the DAX under pressure from certainly when the trade tariff disputes come on to be the key factor driving that move. Now also we've seen an interesting slight amount of support coming back in for gold this morning. It's just initial support. I wouldn't say it's anything to get too worked up about quite yet, but it is interesting, something to keep an eye on, that for some time safe haven flows haven't really helped the gold price, but this could be a bit of a turn. So let's have a keep an eye on that. But generally speaking, we are still very risk negative and dollar positive today, as we see the US trade weighted dollar going higher and treasury yields back on the 10-year back above 3%. So what else are we looking at for today? Well, it's Bank of England day today. It's going to hike interest rates at 12 o'clock. We're going to see a 12. Well, I say we're going to see. Markets are priced in for a 80 to 90% rate hike probability today. Now, if the Bank of England do not hike interest rates, there is going to be a complete and utter sort of disaster zone, I think, for sterling, and Mark Carney's is going to get lynched. So I think that there is going to be a rate hike, but it just depends on how they sort of frame the narrative around this rate hike, because I think they're sort of almost in a position in which they have to hike interest rates, and they're sort of if they don't do it now, pretty much when are they ever going to do it? So subsequently I think they're going to have to do it today, but then it's the narrative around whether it's just a one and done or whether it's going to be a period of sustained sort of improvement in increase in rates in the UK. Now, obviously, we're looking at the voting makeup on the committee. 7-2 is the expected vote. If it was 9-0, for example, that could sort of make sterling find a bit of support. Also, we're looking at what the Bank of England sees as the neutral rate going forward on interest rates. This is a new thing that the Bank of England is going to be talking about, and subsequently there'll be a lot of focus on that, I think, today. Wow. Okay, so factory orders at 3 o'clock for the States are expected to be 0.7% increased on the month. My chart today is the dollar Canadian. Now, the Canadian dollar has been performing pretty well actually recently, and even then, today I think there's been a slight tick higher as the US dollar has strengthened, but not really too much strengthening considering the fact that the other majors are sort of quite more weaker against the US dollar. The Canadian dollar has just sort of unwound a touch, but I think breaking down below the 30.65 to 31.25 level was a key moment. Breaking that uptrend channel, breaking an old pivot range. That pivot has become a sell zone on the near to medium term basis now, so sort of picking higher. This could be another chance to sell. You got that confirmation of the RSI breaking below 45, the confirmation of the MACD line is below neutral. I think rallies are a chance to sell increasingly on dollar Canadian. So yeah, you've got this sort of this little uptick higher, but it could give you another chance to sell. Sort of reflecting that on the hourly chart, where you got low highs, lower lows, and the RSI unwinding back towards 60. Is that a chance to sell? So I wish you good luck in your trading today, and I will speak to you later.